President Trump set to depart tomorrow on a four-nation European tour, expected to meet with longtime allies amid strained trade relationships. The president tweeting this morning, quote, "The European Union has a trade surplus of 151 million." By the way, he meant billion. He meant billion, but he did write million. With the U.S. Big trade barriers on U.S. goods. No! Exclamation point. This after the U.S. and China initiated competing tariffs on billions of dollars worth of goods, and the president threatened to impose $500 billion more. Joining us now with some unique perspective on what this trade war or fight, skirmish means for the economy and for business investment. We have two former undersecretaries for international trade, Frank Lavin and Stefan Selig, right here with us. Gentlemen, thanks to you both. Stefan, let me start with you. How far does it go? Everybody keeps asking the same question. We don't know. Nothing new on China yet in terms of new threats. But Europe also, of course, really is concerned about this tweeted threat about auto tariffs as well.
Well, it's not a trade war yet, David. You know, the administration has called it a dispute, which I think is much more of an accurate description. $34 billion still is not going to have a material impact on our growth. It's not going to have a material impact on inflation. That being said, if the president does escalate it to a $500 billion number, it is for sure that China and others are going to retaliate. And if we get to that level, it's going to be a real war. My concern, of course, is that this is going to have unintended consequences and, in fact, ameliorate, if not eliminate, a lot of the benefits that we're seeing because of the president's tax cuts and the reduction in the regulatory environment.
Right. Mr. Lavin, do you have any expectations here? I know it's very difficult to sort of figure out exactly where this is going, but what are you looking at to try to determine that?
I think it's very clear that neither side wants a war, and one indication of this is we're seeing the Chinese side being very measured in their response. They're not taking an approach toward the U.S. they took toward South Korea over theater missile defense. They're not calling for national boycott. They're not making it a populist or public matter. So they're being very measured, reciprocal in their response, but they're not escalating. And I think also we have to look at what President Trump says regarding China, that he always has a word of praise for Xi Jinping. So I think we're going the wrong way, but it's in a calibrated fashion, and I think it's unlikely to break into an out-and-out trade war. I agree with Stefan on that point.
Stefan, does it matter that the U.S. market is up this year, China's in a bear market? The U.S. continues to grow jobs at 200,000+ per month, and we're heading into an earnings season of more than 20%. The market is suggesting the U.S. is winning the trade war. Is that going to bring China to blink first, to make some concessions as to what President Trump actually wants?
Well, I'm not sure that's exactly what the market is saying. I think the market is saying that we're not in a trade war yet. We are seeing volatility in the market, Sarah, suggesting that the market is concerned about all of this. And so I think we're going to have...
On a relative basis, they appear to be the biggest loser, according to the stock market.
Yeah. For sure, so far, but the stock market is just one gauge, and I guess I would be somewhat concerned about the escalation going forward as opposed to just what we're seeing so far. The president has been clear in saying that he thinks trade wars are easy to win. And he thinks that is the case with us in China because we import more from them than we export. So we have more stuff to tax than they do. I think this is fundamentally misguided. I think it's misguided for three reasons. One is President Xi Jinping does not have to face midterm elections or any elections at all. Two, he controls his media, so doesn't have to answer to CNBC and others about his political and policy choices. And thirdly, the Chinese people, I think, are going to be much more patient and resilient to the pain of taxes and tariffs. So I really don't think this is, to Frank's point, a fight that we want to get in, and eventually the market's going to catch up to that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.